Hello there and welcome to this episode of Ignition Time. In this video, I'm going to dig deeper into some important questions pertaining to unemployment benefits, the $300 week unemployment benefits, and the tax provisions. We're getting a lot of questions from our viewers and subscribers about how all of this works, specifically as it pertains to your benefit year and the new $10,200 federal tax exemption. So let's just jump right in. You'll see an article from the Century Foundation, which is a very, very important article. We'll provide you with a link to this resource in the description section below. This is what makes our channel unique. We don't just give you information, we give you all our references and resources so you can dig deeper into that information yourself. So a common question is, will I get these benefits, these new $300 week benefits, if my benefit year is expiring? So let's answer that question. Now, many of our fellow Americans started filing for unemployment benefits at the start of the pandemic, which is a year ago at this moment in time. It's hard to believe that a year has gone by since this pandemic began. So if you've received a notice that your benefit year is expiring, then what is the benefit year? The benefit year refers to the 1 year period where individuals can collect state benefits and then reapply for assistance. Now, there have been viewers and subscribers who have worked intermittently during this year, then they went off unemployment benefits. Now, the good news is you can go back on unemployment benefits and you will be eligible for state unemployment benefits, but typically at a lower amount during your benefit year if you took a break and then jumped back on it. Now, here's the good news. If you're concerned about your benefit year, you need not be. And here's why. The PEUC program, the Pandemic Emergency Unemployment Compensation Program, which has been significantly extended as a result of the American Rescue Plan, essentially is a federal extension to your state unemployment benefits. So here's where things get really interesting. Even if your benefit year is close to expiration, the PEUC program is likely to bail you out. I'm going to quote the article, the Century Foundation article. Those required to reapply for benefits at the end of the benefit year should not be worried about a major reduction in aid. This includes those who did not work at all in 2020, in other words, if you lost your job permanently, and would not qualify for new benefits. A special rule in the December stimulus extended by the American Rescue Plan allows individuals who are on the PEUC program to defer their state benefits. This is important. Defer their state benefits and continue on the PEUC program at the existing weekly benefit rate through September 6th. Now, this is extremely important. The PEUC program, including the $300 week federal booster, is something you can be on until September 6th. So essentially what you're doing is deferring your state benefits and essentially letting the PEUC program take a priority, if you will, so that you get your weekly unemployment through the PEUC program. And once the PEUC program ends, you can go back on state benefits. That is what this article is referring to. So this option must be provided to anyone whose PEUC benefits are $25 higher than they would have received on regular unemployment insurance, meaning your state benefits, through the subsequent benefit year. Keep in mind, I'm talking about state benefits. I'm not talking about a $300 a week booster, which is the FPUC, which is on top of your state benefits. So states have several options for implementing this new rule and may require that those who are on state benefits to submit a new initial application for state benefits, and unemployed workers should be on the lookout for any notifications that you get from your state in order to make sure that you remain on this program, on the PEUC program, until September 6th, and then get on state unemployment benefits after September 6th. According to the article, in the most common option, individuals would be able to stay on the PEUC program and simply defer their regular state benefits to when the PEUC program ends. The special rule does not apply to those who are on the PUA program, the Pandemic Unemployment Assistance Program. It does not apply to those who are on EB, extended benefits that are provided by the states. The EB program consists of benefits, extended benefits, in addition to the traditional approximately 26-week state unemployment benefits, but the EB program is provided by your state. It has nothing to do with the federal government. So again, the special rule does not apply to those who are on the PUA program or the EB program, and these individuals, meaning those on the PUA and EB program, would need to stay on benefits but at the lower state amount. Now, let's go over some of the benefits of the new federal tax exemption on the first $10,200 in unemployment income, total unemployment income received in 2020 for households that make up to $150,000 in annual gross income, in combined income. This is important. if you receive the $600 a week booster in 2020, which everyone did and everyone was dependent on, you can actually take that booster and your state unemployment benefits and add the total amount, and you will not be paying taxes on the first $10,200 in unemployment benefits received in 2020, which is a huge relief to millions of our fellow Americans. I'll also be covering what to do if you filed your tax return. So make sure you watch this video all the way through to the end. So this exemption applies to all the benefits tied to unemployment insurance, whether earned through a traditional state program or the extra 2020 benefits, meaning the $600 a week federal booster that ended at the end of July. So for example, if you received $8,000 in traditional state benefits, and on top of that, you received $4,200 thanks to the $600 FPUC payment, $600 a week FPUC payments instituted as a result of the CARES Act, then you would have a total of $12,200 in benefits. Every situation is different, so this is just an example to help you understand this. In this scenario, you would exclude the first $10,200 and pay tax only on the remaining $2,000. This also applies to all benefits received from Extended Benefit Program, the EB program, the PUA program, as well as the federal PEUC program. Now, this is where things get a little bit complicated. What if you've already filed your taxes? What now? Well, here's information from the article provided by the Century Foundation. As always, you'll get a link to all of our resources in the description section below. The IRS is still figuring out what to do about people who filed their 2020 tax return. I'm expecting the IRS to issue guidance in the next few weeks. So personally, if you haven't filed your taxes yet, you may want to hold off until the IRS issues guidance, but let's focus on what to do if you've already filed your taxes. If your return has already been processed and if you've already received some sort of a refund check, it is possible that you may have to file an amended return in order to claim the $10,200 exemption so that you can get back another refund check. Now, amending your return basically means that you refile your return, but you subtract $10,200 of unemployment benefits for the year 2020 if you're eligible. Depending on your tax return, this could mean that you get a refund check of $1,000, probably even a larger amount. Now, amended returns can indeed be e-filed using any electronic tax preparation software. And by the way, this form that the amended return form is called the form 1040X. So once again, some commercial tax preparation software can help you prepare and file an amended return, but the form is called 1040X. And you may have to pay a fee to e-file your return, but you can always print and mail in your return to the IRS. So if you haven't filed your tax returns yet, and if you can afford to wait for a refund check, you may want to wait just a little bit. I would imagine maybe 2 weeks or so until we get guidance from the IRS about what to do about this situation, and then you can file. What's sort of ironic in this situation is that waiting to file your tax returns, if you haven't filed them already, and waiting for guidance from the IRS could result in you getting a larger refund check. Isn't that interesting? It's one of these rare situations where waiting can actually get you paid more, a refund by the IRS. Folks, if there's anything that the last 12 months have taught us is that everything that seems normal is out of the ordinary, and everything that is unbelievable is now normal. Just the world that we live in now. I want to be clear, if you filed your return and you haven't heard back from the IRS, you'll probably have to wait a few weeks, because I assure you the IRS is overloaded. They're dealing with taxes, they're dealing with this new law, with the unemployment benefits, they're dealing with the mailing out of the stimulus checks, with the electronic deposits to the stimulus checks, they're dealing with the earned income tax credit, the child tax credit. I can tell you that the IRS is completely overloaded. Plus the IRS is understaffed because the IRS has lost a lot of people. People have quit the IRS and left, so they are completely overloaded. So if you file a return, you will need to be patient. It's not like the IRS is going to get back to you anytime soon. It is going to take some time, and there's going to be a delay in processing your return. Now, if you're expecting a refund from the IRS, your refund could also be delayed. But the good news is it's quite possible that your refund will be larger than you expect because of the new law, because the IRS is likely to implement the new law with returns that have already been filed and have not yet been processed by the IRS. So that's actually good news. So if you are planning on paying your taxes, the IRS might be like, no, you don't owe taxes. We're actually going to send you a larger refund check. This is assuming your return has not yet been processed. This is a weird situation in which individuals filing early are now going to face a few more headaches because they didn't get back the refund that they should have got because a new law was just passed a few weeks before the IRS filing deadline. A very rare situation in which filing early sort of backfires on you, but well, I would say makes you go through the additional step of filing an amended tax return. So that's it, everyone. Thank you so much for watching. I hope you learned something new from this video. I hope you learned something new about your benefit year, about the tax implications on the $10,200 federal tax exemption. Keep in mind that your state may still charge you state taxes on these unemployment benefits. There are some states that are not charging taxes on unemployment benefits. I have done another video on states that are not charging taxes on unemployment benefits, so you definitely want to check that out. All I ask of you is you please click the like button, please subscribe, please enable notifications. That would mean a lot to me personally. That really helps out the channel. Thank you so much for watching. Again, please click like, please subscribe, please enable notifications because it helps the YouTube algorithm. Thank you so much for watching. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. Bye.